Hello and welcome to today's video. In this video we're going to look back at how my Hargreaves Lansdown portfolio performed over the month of February. First off though, I just want to say a massive thank you to all you lovely people for watching. I hit a milestone earlier this month with the channel having its first 1,000 views. Thank you all so much. I'm hoping to keep growing the channel and mix up some of the content soon, as well as continuing to post these monthly updates. So, February. The month started pretty badly. My returns had gone through the floor, inflation was biting hard, the broader worldwide economy was a total mess, growth stocks had tanked, interest rates were rising to try and get inflation under control, and then if that wasn't bad enough, we managed to get halfway through the alphabet with storm names in the space of a week, causing massive damage to power networks, infrastructure and homes. I hope you all made it through the storms okay. All of that now just feels like background noise after the events towards the end of the month, where we saw war on the streets of Europe again. It's not something I thought I'd see in my lifetime. I've seen a lot of posts on local groups asking for donations to help the growing refugee crisis caused by the conflict, which is great to see, but the sheer scale of this crisis is going to need to be dealt with by those who have experience in distributing aid to where it's needed most. I've left a link to the British Red Cross down below if you'd like to help in any way you can. I will also leave a link to the World Central Kitchen, who provide refugees crossing into neighbouring countries with a hot meal. It's a small gesture that I think most of us can luckily take for granted, but for those that have had to flee, not knowing if loved ones are safe or even alive, or where they're even going, this could bring some comfort. The invasion of Ukraine and the subsequent worldwide reaction has raised a lot of questions for me. I try and live my life with as little negative impact on other people as possible. Of course this can't always be avoided, some people are just a waste of skin. But I do believe we as a species should be raising each other up, not beating each other down for your own greed. I sincerely hope a peaceful solution can be found soon. One thing I have admired is the Ukrainian spirit. When the pandemic of 2020 hit, I saw a lot of similar spirit. People were looking out for each other, people cared. It was something I hadn't really seen before. The world felt less global, if that makes sense. I was hoping once the world started to return to normal, whatever that is, that a lot of that feeling would remain, but it doesn't seem to have hung around. Convenience and the ignorance of consequence seem to be back with a vengeance. This is something else I want to address in my life and another avenue I will be exploring with this channel. That's fun to say with a stammer. When it comes to my investments, I would try to invest ethically. When things started going south this month, I could have sunk a load of cash into oil and see some decent gains, but that is not a sector I wish to be a part of. Obviously I want to see returns on my investments, but I'd rather take a hit if it means less global impact. Unfortunately, this is something that is very hard to avoid, but there are still choices out there. I think we will still continue to see a lot of volatility in the markets around the world, but especially in the UK, as the fallout, maybe a poor choice of words there, of the sanctions against Russia may take a while to be seen, as there is so much of their money running through this country. Speaking of Russia, I think it's also important that we recognise the bravery of its citizens who are out on the streets protesting the invasion and the Russian regime. Knowing what the likely consequences are for their actions, I think it's important that they're not forgotten in all of this. So the big question really is where is the safest place to invest my money at the minute? I think for the near future, commodities are probably the safest bet, but supply issues, rising inflation and higher general costs could hit these sectors harder too. As investors, over the last couple of years since the big crash of 2020, we have seen unprecedented growth which has led to more people gaining an interest in it. You may well be a newer investor. If you are, this recent downward spiral may be terrifying to see. If you look back through at previous crashes though, there was just as much panic then, but we still went on to see new market highs. For me personally, as a long-term investor, I will keep on adding to my pot month in, month out to ride out these peaks and troughs over a long period, hopefully seeing a nice gain at the end of it. I mainly choose funds over individual stocks as I feel this protects me from the higher risk of putting all my eggs in one basket. I try and pick funds with highly experienced managers too, that have a proven track record. I do hold some individual stocks though, and have been looking at picking some more to add to my portfolio. With this current dip, I think it could be time to act on this soon. For regular viewers, you may have noticed I missed out my short-term goals at the end of last month's video. I normally set myself some short-term goals just to help me focus and manage my portfolio. With such volatility at the moment, I've decided to leave this for a while. I will still try and do what I think is best for my own circumstances, but I may have to react quickly and you can't plan for anything at the minute. So, with that little rant out the way, let's start delving into my portfolio. I'll start with income. For the second time in the last few months, I peaked just over £6 in monthly income, with a surprise dividend coming in from the Eden Tree Responsible and Sustainable Managed Income Fund. This was actually a bit of a shock, as on the fact sheet it said the dividend was due in April. I also received £1.09 in loyalty bonus payments on top of that, meaning I'm nearly halfway to the £10 auto reinvestment already. This is picking up quite nicely now. At the current rate, I would achieve that roughly every 9 months. My aim is to get this down to below 6 months by the end of the year though. Let's take a look at how my funds have fared this month. I'll warn you now, it's not pretty. As you can see, I've had quite a chunk of money wiped out this month. A week ago I actually went into negative returns for the first time since the last big crash, but luckily some ground's been recovered since then and I'm sitting at just over 1%. I did buy into a new fund this month as a way to try and shield from any more major losses. This was the Global Total Return from Peerford. I added this fund in the hope that it wouldn't be so volatile and we'll see some steady gains over this rocky period. It's made up of mainly gilts, bonds and cash rather than stocks, so it is a bit vanilla, but I should see a steady return from this investment. Having seen how low the Emerging Markets Fund from JP Morgan has sunk this month, I'm a little tempted to buy into this. Having seen all the sanctions on Russia this month, countries will be looking elsewhere to source supplies and companies may look to new markets to do business with. This may mean this area may start to recover, but obviously this isn't certain. I'll run through each fund in a bit more detail now, but won't dwell on them, but if you want to take a better look you can always pause the video. I'm always keen on discussion and love hearing your thoughts though, so let me know in the comments where you think the best areas for growth are currently. Are you playing it safe, or are you going for some risks to hopefully see some bigger gains? That's it for today. Stay safe out there and thank you for watching, and I'll see you next time.